Okay, for 23-3, our two partners are liquidating their partnership on April 30th of the current year. On that date, the financial statements were prepared and closing entries were posted. The general ledger accounts had the balances below. So we have a cash receipts journal, cash payments, and general journal. So our first transaction is May 1st. We received cash from the sale of our office equipment. So that is going to go in cash receipts. So we've got $6,000. And we also will have to look up here. So cash receipts, our date is May 1st. And so we only received $6,000. If we look up here, it was worth $15,000, so therefore we're going to lose some money. So our first account is loss and gain on realization. Document number is R86. And then we know here our cash was $6,000. Okay, and we can't calculate that yet. We also have to do our accumulated depreciation, which is up here as well, so $8,250. And then our bottom line is office equipment, and it's going to be a credit of $15,000. And so to calculate this loss or gain, you take your $15,000 minus $8,250 minus $6,000, and it's a debit then of $750. And next transaction, May 1st, we received cash from the sale of supplies, $950. So we're still here in our cash receipts, and we'll have loss and gain again. Document number was R87. And our next line is supplies. So we know, once again, we got $950. If we look, supplies was $1,250. Internal credit. And so we will take the difference there, and that'll be a debit of $300. Our next transaction, May 3rd, received cash from sale of truck, $7,500. So our date is the 3rd. Accumulated depreciation truck. I'm going to go ahead and put in my cash, $7,500. And then truck. My document number was R88. And then the next one is loss and gain. And so if I go up and look for my depreciation was $18,300. And my truck was $25,500. So if we take this minus $18,300 minus $7,500, we actually had a gain, so that has to be a credit, $300. On May 5th, we paid cash to all creditors for amounts owed, so that will go in our cash payments journal. So the date is May 5th. We won't put anything for the account title. My book has a check mark. They must just want to leave it blank. So check number is 116. And then if we go up and look here, what do we owe? Accounts payable, $1,250. I'll go in the accounts payable debit and cash credit. Okay, the next transaction, distributed loss or gain to Jason Edson 60%, Peggy Karam 40%, M21. So that is going to go in our general journal. So our date is May 6th. Jason. So to calculate what it is, you take from over here, so we're going to have our 750 plus 300 minus 300. So basically 750 and then times the appropriate percentage. So times 60 for Jason and 40 for Peggy. So our document number is M21. And so we're going to have to debit of $450. Then we have Peggy, a debit of $300. And then loss and gain is $750. And then our last transaction is distributing that cash to the partners. We'll go back to our cash payments journal. And our date is the 6th. Account title will be Jason Edson. Check number is 117. And so then to calculate that, we're going to take here our $13,450, what we had in capital, and subtract out what we just calculated. So for Jason, we're going to give him a check of $13,000. And the next line for Peggy, and check number is 118. And so same thing, we'll go up and see what she had. She had $13,000 minus the 300. And so 12,700 and 12,700. Okay, you can go ahead and work on your own.